Hey everyone, Colin here, and I know it's been a while. Sorry, uh, I've been making money in various business ventures, etc. But I wanted to touch base on this. I wanted to post this video about trading a rising wedge. Okay, so a lot of people are shocked about what happened in the market yesterday. Um, I particularly am not shocked. I could see this coming, and I will show you one of the ways that I saw it coming. One is that the market is going to do most of the time the opposite of what most people expect. So when everybody gets extremely bullish, everybody gets excited, everything is in green, that's the time that I start going, okay, a correction is going to be coming. When everybody is fearful and the market is fearful and everybody's going, this is it, this is the one we've been talking about, then again, I look to do the opposite, right? So that's usually how it goes. But one of the patterns that you could have looked at to kind of see that something like this was going to come was this rising wedge. Let me show you an example here. So in terms of drawing a rising wedge, let me show you kind of how we do it here. So you can look like this looks like a stairs almost, right? Like it's going up at almost like a 45-degree angle. So what I would do is I just want to draw a line here where I have at least 2 or 3 touch points. Okay, like that. Sorry. Right. So there I am. Hold on. Got that wick. Right. So I just come. You can do the bodies of the candles actually if you want. I draw it from the wicks too. Okay. If I did the body of the candle, it would be like that, right? So there you go. If I draw the body here, and you notice it has multiple touch points. Body of this one, come down here with this wick, body of this one, body. So there's a lot of wick here. So this is confirmation that this is definitely a support line, okay? You can see that. Draw the top, pretty much same thing, right? We can see here multiple touch points here, here, here. Right, so multiple touch points there. Again, if you want to just draw along the bodies, it's almost the same thing. All right, it doesn't have to be, pinpoint accurate, just pretty accurate. So this shows me that this is a rising, it's rising and it's broadening, right? But most of the time when you have these patterns, there's usually like a 70% chance that it will break to the downside eventually. So what I was looking at as kind of a signal to me for when to look out to sell, because this is rising, right? So I'm saying, okay, when am I going to sell my crypto.com coins? And it's a project that I believe in long term. So to be honest, a lot of times I have a trading portfolio of CRO coins that I will sell and I will buy back when it dips. So I just get more coins for the same amount of money. I don't have to actually take more capital out of my pocket. So what I'm looking for here is when we start to break down and we go below this is the key. When you break out of this pattern, when you break out of this pattern to the downside, what normally happens is we will at least go to the base of that pattern. Okay, that's something that you can generally look for, going to the base of the pattern. Okay, let's see here. So if we look at the base of this pattern, that's about right here, 1076. So here's what happens. First, we need to break down out of the pattern. And after we break down, there's always going to be a retest, guys. You see, a lot of times when the pattern breaks, most traders will start selling. But sometimes it's a fake out, right? Sometimes it could be a fake out and it comes back up into the pattern. You don't know. The only way to really know is after we have a retest and we see and we get a confirmation now that this line that was support is now going to become resistance. So once we get the confirmation that this is resistance, that is when we put in our sell order. So you can either sell and wait, or if you're looking to short, this would be where you put in your short on this trade. Okay, so, and as you can see, let's say you're doing a 3x short, just from right here to right here. That's 11% on a normal basis. So on a 3x short, you're getting 30% on that trade. Okay, you're getting 30% on that trade. It went much further, okay, and that's fine too. But the point is that I sold at about 12.15, literally. Look at this. And to be honest, I sold from before that because I think I had drawn a slightly different pattern, and when we broke out of that one, I sold at about 12, yeah, about 12.15 cents. And so I watched as this thing actually went back up to like 12.70, right? And most people would jump right back in and be like, "Oh my goodness, I was wrong. It's gonna keep going." But I could see that we were running out of steam, and it came down, took a huge pump up, and came right. I mean, is that a coincidence? Look at that, guys. That's not a coincidence. It came right back up to the bottom of that wedge, confirmed as resistance, and then plummeted back down. Right. So you putting in a nice sell order right here and selling at the base of the rising wedge, right? Like I said, you would have gotten about 30% just out of that trade right there. Okay, so so that's what you have to look for when you're actually trading a rising wedge. That's how you can trade those patterns. And then if you're using leverage, a very small movement like that, if you were trading 5x leverage, again, 5x leverage, you got 55% gains on just that short movement in that pattern. You don't have to get the exact top, you don't have to get the exact bottom. But here's the thing now, it's plummeted, and now, of course, most people are fearful. So what I'm expecting is a bit of a relief bounce. I know they got CPI stuff coming out tomorrow and all that kinds of stuff. So we'll see how the market reacts. But what I'm really looking for now is I go down to the smaller time frames. Okay, and as you can see, we had this huge wick. We bounced up, but we have to go back down and fill that wick, which is healthy. That's very healthy normally for a bounce. Okay, very healthy. So I'm looking for us to hopefully get a nice little bounce, maybe up to that red line. That would be sweet. I don't know if we're going to go right back up to this line. Who knows at this point? I never know for sure. But let's hope to see if we can get, a half decent bounce. Otherwise, it'll be further downside, especially if we break this level. Then, if we break this level and confirm that as resistance, then that's a further move down. But for right now, we also see that we moved into oversold territory. So when we start to get into oversold territory, that's where you got to start to look to buy. It's a good time to buy at that point in time, right? See, here we are on the 1 hour, very oversold. I mean, we're at 23, right? So again, these are the times to buy. But of course, this is also the time when most people are fearful and they will tend to sell, only to see it turn around. So just looking at this right here, you can see a hurdle to get over is 99. Well, call it 10 cents. And once we can get past that, then we're looking at about 1066. So let's see. Yeah, this level between 1047 and 1066 will probably show us some resistance. So let's look and see if we can get a bounce here. But again, just looking around these levels, everything is, look at, I mean, so far gone. When you start to see stuff like this is the time to buy. You most likely will not be timing the bottom. Everybody tries to get a perfect time of the bottom. It's not going to happen. But that's okay. But buying in this area, when it recovers, it's going to go past your buying level and you'll be in profit. So don't try to time the absolute top. Don't try to time the absolute bottom. There's plenty enough money that can be made in the middle. But that is how you trade a rising